All right, good morning, everybody. Because of the holiday, we're going to get an EIA report today instead of yesterday, come in around 10 o'clock. Asia closed it down on the day, or inside day, I guess a better way to say it. They came off that high. It looked like they were going to get a breakout, but they just weren't able to keep it. So inside day for Asia is still sitting at the lows of the range. Really nice setup for a TRB, but they got to get it first. Europe, same thing on the other side, though. Really nice price action here. They also came up off of the lows. It's only 12:30 over there. They got time to do more with it on the day, but we really don't expect much more at this point out of the European session. Absolutely no change in WTI and Brent crude. We're still holding these lows. It looks like a great opportunity to maybe get a little bit of a pairs trade between energy and nat gas, or just maybe try to get a trade in energy, but there's nothing here. These things are in the same spot that we were at last year. A whole lot of nothing. The Dow still manages to have a better chart at this point. It looks healthier, a little bit better, but not by much. Today we have revised GDP for fourth quarter. So a little bit here on Finance Juice. It talks about technology shares were sparked by NVIDIA's optimistic outlook. This kind of goes back to what I've said before on companies that don't necessarily move the market because of their earnings, but move the market after their earnings or during the presser of their earnings because they talk about what their outlook is. Apple's big on that one, right? If Apple says things don't look so good out there and we're upset or we're scared, or we're going to adjust our monetary policy because of whatever, it really gets people's attention. And so the CEOs of these companies, or whoever is doing the presenting, COO, CFO, whoever's out there chipping teeth, if they've got a reputation and a background behind them that the market really responds to, these people can move markets, good or bad. So NVIDIA's optimistic outlook kind of bled over into the European side on technology. Kind of goes back to, when we talk about the plunge protection team, and how when I was newer, I had this misunderstanding that the Fed would come out and try to move the market by buying and trading and selling and actively engaged and participating in the market. And that was just absolutely not the way it works, right? But, when you're new, you get these ideas, you don't quite grasp the logic of how someone like the Fed can come in and move the markets. All they got to do is chip some teeth. So right now we're looking at the probabilities for the March 22nd meeting. And we're just trying to see if there's a big change between yesterday and today, right? Yesterday, when we were talking about this, we looked at the 1 week change. So right now we're just looking at the 1 day change. And in the last 24 hours, they've unwound another 3%. Not bad. I mean, they're getting the work done without just absolutely dumping the market. All right, so fourth quarter GDP revisions. We've got quite a number of Fed speakers today, and then the EIA report today, which should have been yesterday. All day, even at 1 o'clock, we got Dolly coming out. So it's going to be a full house all day. We also have additional auctions, 11, 11:30, and 1 o'clock. That's not the one we want. All right, so volume is a little light today compared to what we've seen, but not light enough to be concerning. All right, so it's not that bad. Coming in at just around 100, that's fine. If we were below 80, we would want to know what's on deck. Why is everybody sitting out? So it's within the norm. It's fine. We just turn it off, get it out of the way. We don't have an MDP because we hit it right at the open at 6 o'clock. I don't know, if you want to count that or not in your analysis. I wouldn't count it, right? If you're talking about the absolute, then yes, it's been hit. But if you're looking at it as more from the theory of a market interacting with its daily pivot point, it hasn't hit it. So really, probably a personal call on that one. Whichever one you decide, though, keep note of it so that you make that same decision the same way every time. Don't want to get wishy-washy with it and, do it one way one time and another way another time. We are still inside day, but we've given a good run at least once this morning to break out of it. So far, we haven't done that, but persistence beats resistance. It's a nice phrase to keep around. The range from yesterday wasn't that bad to deal with. I feel pretty good calling that high yesterday and calling that low yesterday. Price, unfortunately, didn't give us a really beautiful turn, right? It got up there and it kind of chopped around and screwed around, and then the FOMC minutes came out and it shot back through there again. But still, it's hard to call tops and bottoms. So, laying out a line in the sand and saying that's a turning point, and if we're going to turn, it very likely happened right there, which is how I phrased it. Same thing with yesterday afternoon. I was talking to somebody else about this. The low yesterday afternoon, there was absolutely nothing here that said reversal. I didn't have anything to point to. And this is important to kind of grasp. I had no analysis, no technical analysis, no indicator, nothing that said that this would go back up at 3 o'clock or that this was the low. The only thing we had was a double bottom, and it looked like a really good place to trap some bears. So if we break below the previous low, the bears get sucked in, right? And then we set the trap, run it against them. They get squeezed. They have to buy. The buy gives us the pop into the close. but there was nothing there to see, right? Just, it's the same chart we've seen 100 times. These days repeat themselves over and over and over again, like Groundhog Day. So it's a little bit like Mahjong. If you can recognize the day that you're in, you recognize a day that you've seen before, you can begin to study what those days look like and what the outcome tends to be. So did I know for sure it was going to go up? No. But if we were going to reverse and go higher, that's where it was going to happen, especially with a little bit of an overshoot just to get the bears sucked into it. Unfortunately, it still wasn't a clean reversal, like a nice V bottom push back up. We got down there and chewed around for a while. And by the time the push came, it was way too close to the end of the day. For me, anyway, not my flavor. Yeah. I mean, I was ready to short that thing down to 39.70, take a good run for it. But I also had the idea that there was a lot of room to the downside, so we didn't have to jump short right away. And with that double bottom setup, you're much better off either not trading the short, right? Waiting, knowing that you can get a run to 39.70 at least. Because if we were going to break down here, we were going to really break down. So there's plenty of room, and there's no worry on timing, right? You can take your time and wait. Let it get a real breakout and then join the short. And we never got a real breakout. Now I tried to go long there, but I was in the SPX with options, and they're really expensive. So when we just hung around here chopping sideways, I took enough profit to cover commissions and I got out because I didn't sign up for a trade that said, well, I kind of hope we maybe sort of go up eventually. I got into a trade thinking we were going to go up. So I didn't lose, I just didn't win. The idea though on those edges is a lot of times you're not going to get something really good that says we're going to turn here. The best you can see is that if we're going to turn, that would be a really great place to do it. And then just be ready for that turn. If it breaks through and keeps going, there's plenty of room to the upside. And that was another reason to be willing to wait. Because if it was a true breakout, we would have gone to like 40, 50. So there was no reason to try to jump the gun and play the breakout as soon as we broke through the top of that pivot point. And take a little time and wait for it to prove it. Yeah. So, I mean, all in all, it was a good day yesterday. Just that was sloppy and that was trash. Still reversed where it should. So now we're dealing with the same thing today. At least so far today, we've got a cleaner inside day, right? Yesterday, we were dealing with a really big day. Today, the range from yesterday is much narrower and much cleaner. So we're looking for an inside day breakout here from a much cleaner area. Up or down, I don't really care which, but if you look at the daily and how far we've moved in 3 days, that nice precipitous drop, nearly 4% in 3 days. And now we're just kind of chewing along these lows yesterday, today. Whether we go up from here or down from here, there's no reason to jump. We do want to keep track of 50% of that big day. If we're bearish, we should stay below that 50%. That would be 40.45. right? We need to stay below that level if we're going to keep our bearish bias. Otherwise, if we can get above and then close above on the day, above that 50% mark, then we can reconsider the idea that we might come back up and retest these highs. From the move itself, breaking down from that high down, it would be from this day, I guess. The 50% mark on that is 40.85. So basically the top of that big red candle. One day at a time, though. The only thing we're really focused on this morning is that we have a really nice TRB setting up, an inside day, and we could get a very clean breakout to the upside. Everything is there. It's all ready to go. $10-day, 30-minute volume profile has been completely trashed. It looks like a garage band had a party in here. This thing is not showing any signal whatsoever. It's not a D or a P, uppercase or lowercase. There's nothing in this profile. We're at the bottom of the box. When we're at the bottom, we expect to go to the top. When we're at the top, we expect to go to the bottom. The point of control is a long ways off, 40.31, and we're sitting down at 40.18. So this is no help this morning. There is a really big air pocket. We went through it quickly, just like we should go through an air pocket really fast. If we get that topside breakout that I was just referring to with the inside day breakout, we should yet again be able to move through this shallow area relatively quickly. So if we do go back up, we should be able to get to 40.60, 40.70 without too much difficulty, which is kind of nice, right? In that move up 40.85 to say 40.90 area, we do have some liquidity and some old volume there to deal with. So it'd be the Monday the 20th, be the high of that day to deal with. But we got time, right? And if you remember, we discounted Monday's price because of the holiday. So we'd really be using either Friday's close or Tuesday, because we just take Monday and wrap it into Tuesday's price because of the holiday. Mapping out a 5x5, we finally did get that 39.88 VPOC that's been on the board for a while. So we can take it off the board. Um, 407 is what it would be on SPY. 407 into 408. 408 is beyond that gap, and I think that gap would take precedent over the volume, if that makes sense. Yep. So as you can see from these purple lines, we're getting back into some history. Now these purple lines have been there for a long time, and yet we can still see a reaction in price. Sure, we punched right through that one, but stabilized on the second one. Price still responded to it later on. The thing about pivots like this is they're really old. We don't know if they have any true value, if they're honestly going to affect price or not. And for some, they've said that just having them on there becomes more of a distraction than anything else, because they're not support, they're not resistance, they're not really supply or demand. They're just areas where we could anticipate a reaction in price. Now, this one is a CPI day. I didn't put the date on it. To me, it didn't matter which CPI day it was, but you could. It was the high of a day on a CPI day. And this other one is 50% of the CPI day, because they tend to be really big days that mark the 50% mark. There's an old adage that says if you put enough lines on your chart, price is eventually going to hit one of them. I hate that phrase. Kind of makes it feel like, it's a waste of time. But they provide context, right? Even if it's not necessarily a support and resistance, it's an area where we do anticipate a reaction in price. And I could argue price absolutely responded there. It reacted there. We're still underneath that anchored VWAP. So on the year, we're below the average. It's not a really big deal yet. We're barely below it. The week isn't over yet. We are back inside the weekly expected move. We're going to close inside of that box 70 to 80% of the time on the end of the week. And so far, that's looking to be true. But, there's still a lot left to the week. 2 days, that's a long time. Looking at the 10-day moving average, you can see the transition from the curve that I've talked about before. So we've set a low, and it's very likely that we're going to make it back to zero at this point. We don't always, right? Like back here, we didn't necessarily get all the way back to zero before we started pulling away from it again. Same thing here. But in a smooth moving price pattern, that's what we would get, right? We go through the high and above it, kind of roll over and curl back, get underneath it, roll over, curl back. The 10 is the mean. It's the center point. It's the average. It's the middle of the basketball court. It's the starting place for everything. So what we're looking at here on the top is KRE on the left side. That's regional banks, and NY Fang here in the middle. And that's that homemade index of the monsters of tech. And it's worth pointing out how divergent things were yesterday. When the market opened, that thing popped to the upside very hard, but it didn't even last, 15 minutes. And then the rollover was really steep, a significant drop in the market. But the whole time, financials just kind of held the line. They didn't really get all that excited until on the sweep down. Now, by the time financials started to break down, this move was nearly done. So it was like a delayed reaction. in that sweeping move. Let's go back here to the SPX. There's that 945 drop. There's the pop, just like the NY Fang had, and then there's the drop, like the NY Fang had. So the monsters of tech were in control yesterday, at least for a while, and financials just really weren't helping out. But in that attempted rally back up, we had financials dropping at that point. So even though this was trying to get some ground and come back up, with the financials bleeding out, we really couldn't get any traction here. And then, of course, you know, as we're all waiting on those minutes. So it become a whole lot of wait and see and, you know, what are we going to get and all of that. But really worth keeping your eye on those two, right? Banks and the NY Fang. When they work together, we really see some moves in the S&P. But when it's divergent and they're fighting against each other and it's tech versus finance instead of tech and finance, then we get these choppy, sideways, disgusting price action that really makes it difficult to trade. Unless you're, you know, the seller and you don't care if it goes anywhere. And then these are beautiful days to trade. We have a market maker move on the SPX this morning. The front end is at 28.27 and the next series out is at 23.58. It's not too much of a surprise because the front end is still getting traded a lot more than anywhere else. Basically, they have nothing that they really need to hedge, and so they're just trading up front. Once they own enough in their buying regime through the first quarter that they've actually got something worth hedging, then they'll start trading farther out on the curve. These implied volatility values often get changed significantly due to the trading activity within these options chains. Right? It's kind of the old thing about how does an individual option get volatility, or this implied volatility? Where does it come from and how does it change? It comes from transactions, volume, what's getting hit at the bid, at the ask, by how much, and then how often is it repeated. That's what changes the implied volatility on each one of these strikes. And then the strike averages out of the money get combined to change that number up there, along with a square root of time formula and a little bit of secret sauce that they don't ever tell us, or they won't release that all of the information on that. But we know quite a bit about it. And the ES does not have the same thing because everybody's not piling into the front end of the ES. So we're sitting at 16 here versus 19 here. It won't be a market maker move until this front one gets higher than the back one. So there's three things that price can do: break up, break down, do nothing. It is possible that we just hold the range today and do nothing. I don't really believe that's the most viable option today, but it is one. I've mentioned it. I want to make sure that I mention it and just set it aside. It's the one that I believe is the least likely to happen. most likely to happen is we break out of the top. It's not hard to decide that since we're sitting here pushing against the top. But if it fails, I don't think we're just going to come back in the box and kind of chop around. If that breakout fails, we're very likely going to go to at least the bottom of the box. At least. So it's a good target. If we get a breakout and fail, we're going to aim for the bottom. It won't be a straight shot. There's a lot of pivots to get through, but that'll be the focus, right? Getting back down there. For the top side breakout, we got 40.42 for half the ADR. And then we got 50% of that big red day. We got the low of the previous week because we're still inside week breakout. And then we have the full ADR at 40.74. And we've got a long-term trend line on the daily from the October low to that December breakdown on the 21st. Now, as long as we're underneath this weekly pivot point, we're considered to be in a bearish market or bearish conditions. And that's 4,100 basically, 4,110. But the thing is, if you're coming up, it's hard to say you're bearish or that you're in a bearish market, but you're still in bearish conditions. So you're going to be looking for reversals, pressure like this to break out. Going to be looking for a capital rotation from whatever was doing good while we were dropping is probably going to start doing bad. And whatever was doing bad is probably going to start doing good. If we measure yesterday's range, 50% of it lines us up with the ADR half. I just love it how things come together that way. 200% lines us up with this fib point here at 40.61. And 250%, which is basically 150% of this measured move, puts us to the top of the range from that holiday event, right? So from Friday to Tuesday, we had that little Monday intervention area. We have the 50 period of moving average right over our head to deal with. That would be at 40.24. Which doesn't seem right because we're at 40.74. Why are those numbers off? Well, let's do it this way. All right, so there's the 50 EMA. $40.24. That's the one you can see that we interacted with yesterday. Couldn't get through it. Interacted with the Globex, couldn't get through it. So persistence beats resistance. If we keep knocking on this door, we're going to get through that 50. What was resistance becomes support, but it has to get through there first. It is worth noting that the 50 is basically sideways at this point, and a sideways moving average is nothing that we would ever trust. But you can't help but notice how price is responding at that 50 right now. The 20 is a long ways off. The 10 and the 20 are tangled together. All right, so that purple line that I just added, that is the 200 period moving average. We got the 50 above the 200, just barely. And we got price interacting with both of those two. But I would argue that 50 has been something that we've been responding to more than the 200. And for the SMA, I mean, none of those are even close to us. So we really got nothing to worry about there. We have the 3 EMA at 40.25.3. That's a surge level. So if we can break through 40.25, we would have an 3 EMA cross, which would be an bullish surge. So everything is there. Everything is lined up for a nice breakout to the upside today. One of the missing pieces is, where's the momentum going to come from? Just because we get a breakout, that's not fire, right? We got to get some fuel on there to really get the move. So where's the move going to come from? If you remember what we were looking at with Asia and then now with Europe, Asia came off the high and closed mid candle. So they couldn't even break out of that bearish candle from yesterday, let alone challenge that big red bar. So Asia looked good, nice, clean, bullish push, but faded back, gave it all back and kind of stalled midday. Now Europe's looking reasonably well. Hell's so far inside the candle. Came up off the lows, but we're still down on the day. We're still less than 50% of this red bar, and it doesn't have any real push to it. So we're not going to get much assistance out of that. We got those Fed speakers today, and it's hard to see that they're going to say anything bullish. The argument right now is kick it while it's down. Right? They've been raising rates. Everything looks like it's feeling the effects, but wage inflation is still sticky. Lots of things are still causing them concern, and they don't want to let up. They want to just keep kicking it while it's down. And some are arguing for a bigger push, for that 50 basis point push. So it's hard to see that we're going to get a bullish momentum out of any of that, which means it's left up to econ. So the crude report could do it. I don't expect that, but it could. I think the revised estimates, the fourth quarter revision on the GDP might have a little bit of fire. And then, we got the jobless claims, and I talked about those on Tuesday. Not jobless claims per se, but unemployment numbers. So the thing is, the setup is there. We're ready to go. We just need to get that trigger, right? Where does the bullish bias come from? What is the galvanizing force that gets everybody back in the game? Semiconductors are looking really good. We talked about how this was likely going to be affected by the NVIDIA earnings. SMH closed at 234 yesterday. It's at 240 in the pre-market here. Trying to negotiate that 50-period 1-hour moving average. On the daily, we still have to get through all of the speed averages. So 4, 10, 20. A lot of work to be done on that. The KWeb constituents are up this morning. Those are the ADRs that we keep talking about. PDD, JD, BABA, Baidu. Energy's up, at least USO. But we didn't really see that in crude, right? We come back here and we look at WTI and Brent crude on the daily. Let's take it to an hourly. Yeah, a little bit off the lows. And nat gas down again, 2.5% this morning. So yesterday was a good push to the upside. It really looked like we were going to start the turnaround. But at the moment, it's still not lower than yesterday's low. So, a base has to be built by some up and down candles here while maintaining a low and not setting new lows. So if we're going to get that base, it's not going to be a straight shot. A V bottom would be a completely different thing. It wouldn't be a base. So it makes sense to see we're getting a little bit of a pullback. We just really need to stay above that $7 level. So I keep coming back to where's the push? I think it's finance. Finance or energy. I don't think it's going to come from tech. Tech's already up this morning a little bit anyways. NVIDIA is one of those fangs. So XLK tech is already up. SMH semiconductors are up. Bitcoin is up, which is our proxy for risk. So we can tell that we're already in a risk on sentiment. Emerging markets and KWeb represents that China element and those China ADRs, and those are up. And yet, if you look at the broader market, we're still inside that range, right? We haven't broken out yet. So the push has to come from something else. With the EIA report today at 10, that gives us the possibility of fuel for the fire for the breakout at 10. And then finance. So those would be the two that I would really put a lot of effort into watching this morning if you're looking for an S&P to actually break out, and the NASDAQ, but more of the S&P to break out of that range and start the push back up again. We have the TRB setup in a lot of these names here. Microsoft looks really good. A 10 MA cross in Microsoft this morning will be perfect for that breakout for the TRB, and an IX10. Just absolutely beautiful. First break it through the 10 at 255, then get out of this red bar at 257 and a push to 260 with an overshot to 262. I like it. Apple's got this bear flag or bear pennant failure. It hasn't failed yet, but it's what I call the setup. Bear pennant or bear flag failure. So we're looking for a breakout of that wedge. Get through the 10 at 150, 150 and a half. The goal would be to close the gap at 153 or 152.75. Look for an overshoot, right? 253, 153. It's not so clean in Tesla since it had that pop up and then down and then back up again. But there is a little bit of that wedge formation with these higher lows. If you're using OCR analysis, right, instead of just regular analysis, the OCR analysis, higher high, higher lows on individual candles, you're already above the 10. You got the 4 coming through the 10. So there's your surge signal. Your 410 cross with price above the 10. 210 would be the target in Tesla. And then above that, we'd go for getting outside of this candle. So 215. Amazon has that same wedge. It's not as tight as Apple, but it's still a nice clean wedge. Also above the 10, also have the surge signal already, the 4 through the 10. So the conditions and the pattern has already been met. If you're looking for the play, it's a break above 97, which is a break out of this IX10 pattern. And, layer your goals, but 99 and then back to say 100, 101. Be really careful with that 100. Remember round numbers, especially the 100 number. Just psychological levels. Netflix, on the other hand, does not have this setup at all. It barely managed to close inside of yesterday's range. So nice recovery candle. Beautiful setup for an R2G, right? Red to green. So if we had more candles, and we would see that Netflix had been trending upward and now it's in a reasonably decent pullback, we'd be looking for a red to green to kind of shift that sentiment across. So on this one, gapping up and breaking out above yesterday would be a great start, but we're not getting that this morning. In fact, we're down more than where we closed yesterday. So it's still kind of lazy daisy and it's not setting up for this move, but Netflix is a mover. This thing can absolutely change direction. So what I would be looking for on this is first getting back through that 4 or the 3, whichever MA that is, the white one, and aim for the 10, 341. This also has that machine gun stop set up to it. All right, so if we do start triggering, if you don't know what that phrase is, it comes back to the strat. You can just kind of like go to YouTube and type in machine gun stops or machine gun reversals or something like that. I always screw that name up, so I'm sure I'm not getting it right this time either. But you can search for it and find it. And it'd basically just be the idea that if this is a reversal in Netflix, each daily candle that it breaks through will be triggering the stops for all those that are shorts, and it just adds to the buying and adds to the push, and you get a day that looks like NVIDIA. That's not what happened with NVIDIA, right? Because NVIDIA had earnings, but it would look exactly like that. And then PayPal's kind of got the same wedge and the crossover and all that, but I don't like it. It's not exactly the same. And if I had to play any of these names, that would be the least of my choices. If you do want to play it, 77 is the next level, and then 78.5. And Google, man, that's a really tight wedge. And I like how that lower end, it's got those higher lows. No argument out of that. Really nice IX10. 93 to get through the 10 MA. Get through 94 for a solid breakout. And 97 back to the top of the range. 97, 96.5. Something like that. So you can see it's kind of the same setup on all of them. %25 of the NASDAQ is up at least 1%. I'm not feeling that as even, reasonably bullish. And only 9% of the S&P is up more than 1%. It's not enough. We got to get some juice from somewhere. Look at the names that are up. They're all up because of NVIDIA, AMD, Intel, Broadcom, Qualcomm, Adobe, Salesforce. These are all just bleeders from that one thing. Now, ConocoPhillips and Tesla, yeah, okay. You get a little bit outside the box on those two. Otherwise, this is not implying a bullish move this morning in the market. It really looks like the range that we were looking at will defeat any kind of breakout at this point. So we got to get something from somewhere. So that's what I would do with my attention. Really look at financials. Maybe keep your eye on the energy space as well, especially with the EIA report at 10 o'clock. That gives you the greatest chance of a breakout with follow through, especially at 10 a.m., right? So be watching as we come up and test this high, the Globex high that we've already got, and then the high of yesterday, looking for that breakout. Now, once we start the breakout, it could be one of those mornings where it just goes and it really doesn't try to offer you any kind of pullback. Those are like the worst kind, right? Because you're looking for an entry, you're trying to behave and be good and wait for that pullback, and it just keeps on going and it runs right up into the next level, and then that's where it stalls and dumps. So it's going to be, if we get that breakout at the open, it's going to be a little tricky. The thing is, it doesn't look like it wants to wait for the open. So it's kind of gaming this out here a little bit. What if we set a new high before the open and we pull back? Now it's a game changer. That's a completely different situation, because now when we come into the open and we got the EIA report, we got everything going on, what we could see is we get into the open at that point and we get a run and we come up and test that high set in the Globex, And that is where it fails and we dump. So be very careful of that, right? It'll look a little bit like yesterday where we set that high. We came off of that high and then we came into the open, made a run towards it, didn't even actually get to it and then dumped. So it wouldn't be exactly like that, but it'd be, it's kind of the same logic. Remember, these days repeat, right? We've seen this game before. Everybody be careful, be safe, have a good day. I'll see you all tomorrow.